All right, good morning, trade pros. Welcome to our morning market update for Friday, September the 28th of 2018. This is George Papazov, Trade Pro Academy. Today is the last trading day of the third quarter, and you're going to see some volatility because of that. You're going to see some funds rebalancing their positions. So it's a very important day. It's not as big as the quad witch last Friday, but there is going to be opportunity and volatility in today's markets to end the week. So let's use this as an opportunity to end this week strong, and let's put some more money in our bank account and then leave for the weekend and enjoy the time with our family, friends, and loved ones. So today's morning market update, we're going to talk about Elon Musk, and we're going to talk about mortgage rates in the United States and what that could mean for the economy. All right, so let's get started. First and foremost, we're taking a trip around the world. In Asia, Japan's up 1.36%. This is really cool, guys. Japan's Nikkei is trading at a 27-year intraday high overnight. Huge. Yeah, 27-year high on the Nikkei 225. So Japanese markets have been really strong over the last couple of days. You guys remember as we were doing these morning market updates, every time Japan was up 1.25%. So it's about time that they hit some kind of pivotal moment, and this is it. This is a massive high for them. It's driven a lot by improving corporate profits. Their corporate profitability has gone up. The economy has turned up as well, and really the most important thing is the weaker Japanese yen. All right, as the yen has sold off, that's helped the equity markets rally. They've caught a bid because currencies and stock markets of countries are typically inversely correlated. That's helped drive the Japanese market higher. It's on track to finish the Q3 as the best performing index in Asian markets. So that's huge. That's a big thing for Japan. They're up big. Hong Kong's up 0.2%. China is also up 1 whole percentage point, and India's down 0.3%. All right, we're getting a nice rally here in the Asian markets. Nice continuation to the upside. Remember, a lot of the time, even though the Asian markets open first for the week, they open Sunday at 7 p.m. Eastern, some at 6, some at 7. Futures open at 6 p.m. Eastern. They're the first ones to start trading for the week. But then as Monday goes to the U.S. session, the momentum of U.S. spills into the Asian session. So the upside yesterday was experienced by upside in U.S. equities. However, you look at this morning and U.S. equities are down and they're flirting with lows from the prior session. So we're in a conundrum here, and I'll explain to you how we're going to trade it in a moment. In Europe at midday, London's down 0.2%, Paris is down 0.4%, Frankfurt's down 0.7%. So you can see European markets lost that Asian session momentum and are now selling off. Futures in the United States, Dow's down 0.1%, S&P down 0.1%, NASDAQ down 0.12, so a little bit more than 0.1 percentage point. So equities green in Asia, that momentum gets lost. Red in Europe, red in S&P 500 and other U.S. market futures. Excuse me. All right, crude oil is up 0.2%, currently trading at, I don't know, if I minimize the screen, I would know. 72.12. Thank you, Marky. 12 bid, 13 offer. That's where we're at, and it's up about 0.2% from yesterday's opportunity. Yesterday we traded oil quite a bit, and I was at the trading desk till 2:30 till the pit closed trading this thing, and there's been a lot of opportunity. All right, so we got to capitalize on that. Gold is down 0.3%. Gold got smashed yesterday, and the reason it got smashed is because equities were going up. All right, now I'm starting to see an opportunity for gold to maybe stabilize and head higher. Remember, the month of September and October specifically are very bullish for gold from a seasonal perspective. So there could be a little rotation here on the gold. And I think as we finish today, we're going to finish the equity market on highs. We're going to rip into the close. And I think as of next Monday, the sell-off is going to happen. I think we're going to pull back here. It's time to kind of take a nosedive as we see bonds and gold rip along with the dollar. So we're going to see a reversal of institutional money coming out of equity assets and into safe havens, which means gold, the Japanese yen, and the US dollar. And Bitcoin. Bitcoin's forging itself as a safe haven asset, believe it or not. And I think that's a comfortable niche that it could occupy. I think that's a good spot for it to be. Bitcoin's up 2.76% to 6,600, still mid 6,000s. Today on the economic calendar, 9:45, we got Chicago PMI. Chicago. Not really. That's true. Victoria mentions a good point. Jerome Powell, during his press conference, That's why I surround myself by smart people that wear Versace t-shirts. Look, there's Victorio. Pop that collar, Victorio. Come on. Oof, oof. So Victorio mentions that inflation's a key thing to watch, and I agree. And PMI is a reading of inflation, a lower level reading of it, but still an important number. So I think traders are going to watch it a little bit closer. 945. It used to be a huge number, Chicago PMI, and last couple of years it hasn't been followed as much. But nonetheless, careful at 945. Jerome Powell said the only way he'd continue to raise interest rates or raise them more aggressively is if we got inflation increasing. And inflation has been increasing. So watch that number. 10 a.m. we got consumer sentiment. 1 p.m. we got the Baker Hughes rig count as well. And the Baker Hughes rig count is supply side of oil out of the United States. If you're going to be trading oil, 1 p.m., watch for that. All right. Last but not least, we got two updates actually to end off this broadcast. The SEC is formally or officially suing Elon Musk. And this is huge because when it happened, I was talking about the SEC and saying that Elon Musk is in big trouble if he didn't have the funding secured. And the SEC's found enough evidence to pursue a lawsuit criminally against them. And so here's the thing about this. The thing is that if the SEC wins and has their way, here's the scary part for shareholders. The SEC is looking to charge him with securities fraud, and they're seeking to ban him from serving as an officer of a publicly traded company forever. All right. So that means he's going to be removed from CEO post, not by board of directors vote, not by shareholder meetings, but by way of legal action. He's going to literally not be able to do his job. And it's not just Tesla, it's SpaceX as well. He's not going to be able to serve as a public officer on a corporation. Therefore, stick a fork in him. He's done if the SEC wins. He has vowed to sort of fight back and say that this is what he said: integrity is the most important value in my life, and the facts will show I never compromised this in any way. That's kind of his quote to rebuttal this lawsuit. The board and the board is confident that he's going to win and they support him, but shares of Tesla are down 13% in after hours trading. That's a huge sell-off. I'm going to tell you this: the SEC is a very slow organization to act. The SEC leaves lawsuits on the table and doesn't pursue action, even if it looks like it's 70%, like it makes sense. The fact they've done this could be either pressure from market participants and short sellers who have their own lawsuits against Elon Musk, or they got good enough evidence to remove him from the board. Either of those two things doesn't look well. Careful. Tesla could be in trouble. If you're a shareholder, I wouldn't advise. If you think Tesla is going to be here in 10, 15, 20 years trading higher, hold your shares. All right. But I'll tell you this: don't buy more until you know what the outcome is. And if you've been in Tesla for a long enough time, it would make sense to get a little bit of profit. If you have a couple hundred shares or 50 shares, whatever you have, take half off, get paid, and see where this thing sells off to. Use that half to put it back into the trade when it gets down to support. Again, remember, none of this is advice or a recommendation or solicitation to do any trades. Legal disclaimer. And I think it's crazy that I need to say that, because if you listen to a dude on YouTube and manage your investments, that's on you, man. I don't know your account. I don't know your positions. I'm just giving you what I think, and that's what it is. It's worth gold, but it's not a solicitation for you to do anything. That's just my thought. Careful. I think this is just beginning. There's no end to this, and the end could be Elon Musk leaving. Last thing I want to talk about: mortgage rates in the U.S. jumped to the highest level in more than 7 years during the past week, according to a Freddie Mac report. The 30-year fixed rate mortgage rose for the 5th straight week. All right. And it's up to an average of 4.72% for the week ending September 27th. Isn't that funny? The federal funds rate, the FFR as they call it, the Fed rate is 2.2% to 2.25 band, and mortgage rates are 4.75. That difference is called NIM, net interest margin. That's what banks profit on. All right. Actually, it's not the NIM is not the difference between the Fed rate and the mortgage. It's actually between what they pay for deposits and what they collect for mortgage. All right. Anywho, point I'm making here is, and it's a little more sophisticated than that even, but what I'm saying here is that consumers are really feeling the pinch. All right, guys, mortgage rates are up. A lot of these banks sell people on mortgages based on the fact that they want to make it affordable. You know, what's your goal as somebody that works at a retail bank? To sell as much crap as possible to as many people as possible, Right, Mark? Would you agree? You know, irrespective of what they need or what they can afford, it doesn't matter. Just sell them the crap. And the problem with that is that people are getting stuck with mortgages that they can afford now, but as the rates go up, that's going to squeeze them. Every little bit of an increase in the interest rate is cash, more cash flow out of your pocket. And if you're leveraged tight already, imagine what's going to happen as interest rates go up. So this is what I'm telling you. Fed's raising rates, and it's good and all, but that's going to put real pressure on the consumer. If you spend more money on housing, therefore you have less money to spend on other things. So consumption and consumer power gets decreased with an interest rate rise. Mortgages are up to a 5-week high at 4.72%. Home builder stocks are posting broad losses because people aren't using materials and they're not buying new homes because they can't afford the one they have. And interest rates are going up. They're getting priced out of the market. So a few ETFs you could look at are these: ITB, XHB, PKB, and HOML. All right, check those out because they're going to be in play based on this news. So higher rates put pressure on the consumer. Know that, and there's a trading opportunity for you right there. That's all I got for you guys this week. We're done, actually. This is the last morning market update of the week. Now I'm going to turn around, open the trading room for the trade pros, draw some levels, and take some great trades and be out of here by 11 a.m. Hope you guys enjoyed this. Vic, anything else? Versace Victorio, anything else? Versace Vic? Yeah. Ferrari, we got a lot of people in the room. Yeah. We have Ferrari Frank and Versace Vic. We need you to come in, and we'll make a silly nickname for you as well. We'll see you guys on Monday morning. Have yourself a great weekend. We got 2 great videos coming out Saturday and Sunday on YouTube. Thanks for tuning in, guys. Have a great week. Take care. All the best. Manage your risk and trade like a trade broker. Bye. I had to pick up my phone. Got a little excited. All right. All right. I like it. I like it, Marky. All right, YouTube. Take care. You guys have a good weekend. Trade pros in the room. Let's turn our attention to the screen and draw some levels for you. Victoria will talk about NASDAQ. Then we'll bring in Steven for oil, and we'll cover each market, set up some trade opportunities.